We are going to talk ethics in FinTech with Joseph Healy, the CEO of Judo Bank, co-founder of Judo and an international banker, the man who decided to change the world. He spent more than 35 years in banking, held executive positions at Lloyds, CIBC, World Markets, Citibank, ANZ and of course NAB. He's a fellow of the Chartered Institute of Bankers in Scotland, senior fellow of FinTech. As I said, of course, Black Belt, a masterclass for startups and entrepreneurs, is an absolute must-read. His fourth book. So I don't know how you find the time to do all of this, Joseph. Ladies and gentlemen, please put your hands together for the amazing founder, Joseph Healy from Judo Bank. Give him a yell, Sam. Welcome. Grab a seat. Joining him for this fireside chat is Chris Parker, the Director of the Ethics Alliance, a community of organisations across sectors that work to collaboratively shape the future of business ethics. She's also Director of the Banking and Financial Services Oath, a pledge of integrity and commitment that aims to increase consideration for stakeholders and decision-making accountability by financial service professionals. Needed now more than ever. Please welcome Chris Parker. Over to you guys. Enjoy this conversation. Lean in, everyone. It is going to be fascinating.
Yeah, okay. Hi, everyone. Thanks for joining us. Thanks for staying. I'm just going to jump straight into it because we've only got half an hour, and I'm with rockstar Joseph. So we heard this morning Stephen Jones talking about, the government working closely with FinTech Australia to develop regulation around screen scraping and address scams. And I think that the aim is to raise the standard to meet community expectations. And I see regulation as something that is responsive. It looks back. Whereas ethics is future-proofing and something that looks forward. But regulation can have negative impacts. We heard Shane Elliott yesterday talking about the lending rules and how he thinks it's creating a less equitable society. It's very costly in compliance, and that's then passed on to shareholders and to customers. So with that in mind, Joe, we've got a heterogeneous, wonderful community here in the FinTech industry. How do they future-proof, their strategies and their work to prevent excessive regulation, which might stifle innovation?
Well, it's a great question, and it really plays to events like this because it's very important that the industry talks with a united voice and uses the collective muscle and intelligence that's in the industry to help shape and influence the way that government is thinking about things when it comes to regulation. Personally, I feel that the regulatory environment is just too piecemeal, it's too marginal. What really needs to happen here is to get off the busy dance floor of reacting to events onto the balcony and ask what sort of industry environment are we seeking to create in the financial services sector in Australia, and what are the right policy construct to help support that? And competition is central to all of this. And so the problem right now is that the regulatory environment, in my view, lacks a strategic sense of what it is we're seeking to build and the role that regulation should play. As a result of that, regulation becomes unwieldy and businesses are burdened with costs, a lot of these costs, really low value-added costs. So it's really get off the dance floor, onto the balcony. What is it we're looking to build here? Fantastic opportunity, but what do we need this to look like?
Yeah, and I think from an ethics perspective too, regulation can actually cause the ethics muscles to atrophy in a sense. It can prevent people from doing the right thing. So I think that's where the strategy's got to really be forward-thinking. What are we actually asking for? And is it fit for purpose?
Well, because the world then becomes compliance-driven. It's all about, are we complying with regulations? And that really does, to my mind, miss the point. The point is around the ethics in the industry, the standards in the industry, but we are in a world that we are hugely burdened by compliance. And it means that directors and founders go straight to the lawyers and accountants and say, are we okay, are we compliant? when actually that shouldn't be the question they're asking.
Yeah, and I think also when it comes to regulation, often, the regulators will hand that regulation to the entity, and the intent of the regulation is often lost. So it's taken on board immediately as, okay, so what does the regulator require from us to prove that we are actually complying with the regulation? And the actual intent of what that regulation is for is lost. And I don't know how that gets communicated, but it seems like a real gap to me.
Well, this is the role, I think, a fundamental role of the industry, to help shape rather than react to the regulatory environment, but shaping the regulatory environment in the strategic context about the potential, transformative potential of FinTech in Australia.
Yeah, okay.
So big picture strategic thinking.
Okay, you're pretty good at that. In 2020, May 2020, Judo Bank secured the unicorn title. And I think you were the first neobank to secure that and really challenge the traditional models. But I would like to have a shout out to Steve Weston and anybody in this room that worked for Volt. They tried bloody hard and they did a really great job. You were also a leader at NAB in leading their business bank. So I'd just like you to share with us a little bit around what are the skills that are required to lead a fintech, and how are they different, or are they different?
Well, I think being a maverick, having a maverick personality helps a lot. It doesn't necessarily help your career inside large institutions, but it does cause you to think about what is possible. I'd spent my whole career inside large banks, but could see the issues that were emerging and the gaps and opportunities that were emerging. But the transition from being a senior executive in a large banking institution to being an entrepreneurial founder of a new bank, they require very different sets of skills. And as I say, being a maverick helps a lot. It can be frustrating for those working with me, but it helps a lot.
And for those that aren't mavericks, what are the kinds of skills that you think are different? What's really needed to run a business in a digital world?
You have to think very differently. I mean, building something from scratch or transforming something, the skills that you have developed inside larger organizations can be helpful to some extent, but they're not helpful in building what I would call an entrepreneurial business. It requires a very different mindset. It does require, obviously, quite a lot of risk-taking, quick decision-making, and that's not something that people who've grown up in large institutions are necessarily comfortable with.
Yeah, and from an ethics perspective, that does make me go, ooh, risk-taking, quick decision-making. I mean, how do you incorporate or create the capacity for that deeper reflection and consideration of consequences, that kind of thinking?
I think when you start anything, a strong piece of advice that I would always give is start with the end in mind. In other words, have a view of what it is you're seeking to build, a 10-year view of what it is you're seeking to build, rather than kind of growing incrementally. And part of what is it you're seeking to build, Stephen Covey, begin with the end in mind, was one of his famous principles. But one of the things that you then address is what sort of culture do we want inside this organization? Because at the end of the day, financial capital and technology will get you so far, but the X factor in any business has got to be its culture. And the culture plays to the issues that you're talking to, that you don't want deep and lengthy policy and prescriptive procedures. You want to have a workforce and a culture that knows the right thing to do, and knows the things that you should not be doing. Politics, for example. So I think this goes to the culture, and it's something you've got to think about at the very beginning when thinking about what does this look like in 10 years' time.
Well, that's what I was going to say. I mean, at Judo, professionalism has always been one of your strong strategic pillars. You've discussed that for years and years. Everybody at Judo Bank has taken the Banking and Financial Services Oath, which is, for those who don't know, it's an implicit demonstration of your integrity. It's voluntary, but it works to help individuals if they want to hold themselves to account and others in a supportive way. So that deals with sort of the individuals. And I think when you're dealing with AI, there is an individual responsibility and onus on you to understand the purpose, to understand who your target audience is, and is your product and the algorithms that you're using fit for purpose, and then, of course, leaving no one behind. But how, I mean, you talk about that culture, but how do you create that ethical culture that doesn't fall foul of ethical fading, that doesn't sort of adjust just slightly for competitive gain? I mean, what does that supportive ethical culture look like, and how do you encourage it?
Well, I think it goes back to the beginning, and building an organization that's truly purpose-driven. We didn't think about building Judo to build a business to make money. We said that there's a real opportunity to build something that can make a difference, that's going to be purpose-driven, and be defined by some core values. The foundation values that act as an anchor to whatever decisions you make. Inside our company, it's around teamwork and trust, performance and accountability. Everybody knows what those values are. And part of and ethics, to my mind, is very much an integral part of that. I mean, trust, being able to build an organization where the culture, where people are open, information sharing, very transparent, and trusting of each other is something that we work hard at and continue to work hard at. And elimination of the sort of destructive politics that you sometimes are evident in some larger organizations and can creep in to smaller organizations if you're not vigilant to that.
Yeah, but and I appreciate that, but ethical fading or that sort of incremental unethical behaviour can seep into a culture. So how do you deal with accountability?
Well, you have to recognize that from time to time, and particularly as the company grows, those conflicts will emerge. So Judo became a public company in November 21. And my mental model was, well, we're a public company, let's just continue doing what we're doing. And then you suddenly realize that you've got investors and analysts looking for more profits every year. And you think, well, actually, I don't want to run this company for the short term. I could make more profits next year, but actually I'm thinking about 5 years ahead. So there is inherent conflicts because the market will say, no, we want you to do this. And you're saying, well, actually, that's not what we want to do. Mm. And then people will say, well, you've got to deliver on your numbers, you've got to deliver on your projects. And sometimes that can narrow the focus and create inherent conflicts. And that's what leadership is. A big part of the role of leadership is to identify those conflicts ahead of time, ideally, but then manage them. Make sure that people are allowed to make the right decision without being compromised. And the right decision is always, in my view, what is in the best interest of the organization, consistent with the purpose and values of the organization, and consistent with the future aspirations of the organization. And hold firm on that, when investors say, no, we want to see you do this, I'll say, well, thank you for your feedback, but I'm running the company, And of course, that might not get you...
There's the maverick.
No, but I'm running the company. So if you want to apply to become the CEO, send an application into the chairman. But I'm not going to be told by short-term investors how to run the business, given that this is a purpose-led, values-driven organization. Hopefully there's no investors in the room.
Well, hopefully there are, because this is pretty bloody impressive. Ethical and responsible AI, that's something I've been spending a lot of time in, and I think there was a time where the expectations from the community around what ethical AI was managing your data security, managing shadow IT, hallucinations in your machines, bias outcomes, that kind of thing. I actually don't really see that as ethics anymore, ethics AI. To me, that is hygiene. That's the minimum we as a community can expect from organisations that we're dealing with when it comes to their use of AI. So if that was then, What is now and in the future? What do you see as ethical or responsible AI? What does that look like?
Well, I think the expectations of society are changing enormously. I mean, every business today will be thinking about ESG in some form or the other. The people that come to work for you have a very different set of expectations of the organizations that they are associated with, as are your customers. That change is ongoing and building pace. And no matter what business model you've got, whether it's an AI-led business model with the use of customer information, there is a very high expectation around the using that information for the reasons that it was intended, with the consent of your customers, and for good use, for adding value back. Not using it to maximize profitability in the short term, but actually adding something back to your customers. I think businesses are transforming. I mean, and new businesses, obviously, as most people in this room, have a wonderful advantage over old businesses. They're not having to undo the legacy cultures and values that are deeply ingrained in new organizations. When we set Judo up in 2017, we said that we've probably got 5 years to shape the culture of the organization, shaping the culture while the concrete is still wet. Because after 5 years, that cultural concrete is quite firm and fixed and really difficult to change. So when big companies say that we are going to embrace an ethical approach to doing business or embracing ESG with real enthusiasm rather than a compliance obligation, it is really hard for that to really resonate inside these large companies. Because people always remember, at the end of the day, I've got to make a profit. And I've got to get there, make a bigger profit than I did last year, and I'm going to get there. Whereas new organizations are not burdened with the legacy that does burden more established organizations. But never lose sight of the cultural concrete as it hardens. And I think in most organizations, you've got 5 years maximum, and then it starts to harden, and it's very difficult to change.
Yeah, and I think on that point too, from an ethics perspective, 2 golden rules. One is hypocrisy. So when you set your values and your principles and your purpose, that everything is put through that. That is a lens that drives behaviour, that drives your processes, remuneration, the way you hold people to account, everything. And also the other sort of death of ethics, I suppose, is that unthinking practices. And that's, I think what you're talking about is an advantage as a new starter, is you have to think about everything because you've never done it before. So it's like, oh, should we do that or should we not do that? And then at around 5 years, as you're saying, it's set. And I would encourage you or challenge you that that's perhaps a time where you lift the game again to say, okay, well, this is really working, but is it fit for purpose tomorrow? Do we have to question that? Like coming through COVID, the pandemic, the amount of people that said that they're still doing the same processes and strategies and things. I'm like, if you're not questioning everything that you've done, then you're going to fall into that sort of pattern, which... Anyway,
correct.
Yep. All right, so just sticking on the ESG thing there for a second, I know that you've had, when you started Judo, you went on several rounds, fundraising rounds. And I'm just wondering, did you screen those investors? Did you question where that money was coming from, and was that important to you?
It was very important. It was very important, and we did screen carefully. You know, there's an old Arab saying, tell me who your friends are, and I'll tell you who you are. And so we were very conscious that the shareholders that we had would make a statement about the company, that they would attract other shareholders like-minded. Equally, if you had the wrong type of shareholders, that would act as a deterrent to other shareholders. So you want shareholders who are genuinely interested in what it is you're trying to do, who are long-term in their thinking, not asking you to maximize outcomes in the short term, that are truly aligned with your purpose and your values, and that their reputation makes a big statement about the business. And as I've outlined many times in the past, we had 86 meetings around the world 4 or 5 times before we got our first dollar from investors. And there were, I won't quantify it, but there was certainly a number of investors that we said, actually, we don't, having had the meeting and understood where they were coming from, that actually they weren't the right type of investors for us. Now, this is the conflict, because the burning priority is to raise money. You know, you kind of say, look, I need the money, and maybe I'll do the due diligence on the investor later. Big mistake. Big mistake. The wrong investor can actually damage, if not significantly damage or kill the business, actually.
Yeah. Not just reputation, but
not
even
reputation.
Beyond that.
So,
yeah.
you know, but I understand the conflict. I need to raise money to keep investing. But do your due diligence on the type of investor that you want, and ideally that type of investor should be an investor that says something about the values and the ethical standing of the company.
So do you apply that same process of screening to people, to your customers?
Oh, almost certainly, because we're fundamentally in the business of lending. I mean, Judo is a SME bank that lends money to small to mid-sized businesses, and we have a 4 C's approach to our assessment of risk.
Yeah.
And the first C is the character of the business owner, the reputation, track record, integrity, credentials of the business owner. And then the second C is the cash flow, the capacity in the business. And the third C is the capital that sits on the balance sheet. And the fourth C is collateral security. Now, I wouldn't lend $1 to any business or any person, no matter how much security they had, if I had cause to question their integrity, including their ethical standard. That's fundamental to risk, in my opinion. It's lost in the industry, and but that assessment of risk using that hierarchy, if you can't get comfortable with the character, stop. Don't look at anything else. Stop, because if you skip past character and think, oh, the numbers look okay, and there's plenty of security, my almost 40 years in this industry tell me that you will live to regret that decision.
We don't have time to go into this today, but I worry about our capacity for forgiveness. I worry that the internet provides an environment that if somebody makes a mistake, alleged, unethical behaviour, not even definitive or legal, that situations like this might come to bite them 10 years down the track. And there isn't time to go into that, but it's a really interesting discussion around how we treat people who are trying to, have a second go.
But let's be clear. I mean, I'm not saying that because people made a mistake in the past that you should therefore not do business with them. I mean, the reality is that most entrepreneurs will have had 1 or 2 failures. There's nothing wrong with that per se. You have to ask what happened and how did they respond.
Yeah.
And if they behaved in an ethical manner and they've learned lessons from it, could be the best lending decision you've ever made in your life.
Yeah.
But if they were dishonest and they didn't acknowledge it, and they let people down, and they exhibited other traits that, frankly, you can't ignore, go by your gut instinct, when you come to dealing with people. The old head, heart, and gut. Don't underestimate
the gut.
The gut.
Well, we often say that's a good place to start with ethics and then end with the head. I know we're running out of time, but I do want to ask, today our Prime Minister is going to be announcing the date for the referendum that's coming up, and this isn't a discussion into that referendum per se, but I think it brings up interesting questions for business just more broadly about whether they have a right or an obligation or a responsibility to stand up and take a stand or endorse any kind of social issues. And I don't mean necessarily The Voice, it could also be marriage equality, it could be anything. How do you feel about that, Joe?
Well, I've got very strong views on it. I don't think it's a role of business to be expressing those views. I mean, if a company comes out and says, we support yes or no, you've got thousands of people inside that company who might have different views. And you've got to respect the individual views of people and not marginalize people by a company saying that we support this social issue, that the obligation should be the company to help its people, its staff understand the issues. That I don't see any problem with that. But the company coming out and expressing a view that staff within that company might disagree with and therefore feel marginalized by, I just don't think that's a legitimate purpose of business. That's what the political system and the individual, we as individuals should make our minds up on these issues and not feel forced by some grandstanding, egotistical driven CEO. So we should not do that. I think it's wrong.
And perhaps we shouldn't have a brush over everybody who supports social issues as being egotistical. I mean, some people just feel really passionate and they feel it's their right.
As private individuals, nothing wrong with that. But not using the company platform to do it, I think that's totally wrong.
Do you think that's just for a listed company, or do you think that's for any company?
I think generally, I think, if it's your company, you can do some things, but I think you've got to respect the views of the people that work for you and the customers that do business with you. And you shouldn't be forcing your views on people.
Okay.
On these issues. I've got really strong views on this.
I know you do. I love it. And we've got 2 minutes left. Just really quickly, the hybrid environment. I mean, what do you think? Hybrid, yes, everyone get back to work. Everyone can work from home. Just quickly, your view.
I think flexible working arrangements are now the norm, and that's good. But we are social animals, most of us. We learn from being around each other. And so I'm a big believer in encouraging people to spend as much time as part of a community as possible, whilst at the same time encouraging flexible arrangements. But there's a balance.
Always a balance.
Always a balance.
Were there some questions? Is that what you were suggesting, or do you want us to get off?
I think we're getting kicked off.
I think we're getting kicked off. Big thank you.
I just think this is such a fascinating conversation. Are you guys happy to continue for a couple more minutes? Yeah, absolutely.
Okay.
I mean, Joseph could listen to you all day on a range of issues, so let's not waste it. By the way, the Prime Minister has announced October the 14th is the date.
Okay, thank you. Wow, I timed my questions to be 12 o'clock on. But is there anyone that would like to ask a question? Yeah.
Oh, yeah. So, Jim, we'll get the mic to you.
So in your description of your sort of credit assessment framework, you mentioned, an assessment of character and capacity. That sounded like it was from an experience base and a very, held a lot of meaning to. How do you want to, on a practical level, imbue your underwriters with that and your relationship managers with those kind of, I suppose, techniques and experience and gut and heart and all that stuff you mentioned?
It's part of the hiring. It's part of the hiring process. We actually test for that. When bankers or people join the company, they do after all the interviews, they do a 3-hour closed door, closed book test. So we give them a hypothetical case study. So here's an example, right? Because this goes to moral judgment, which we're not asking people to make a moral judgment. But Charlie is a 52-year-old owner with his wife Mary of a downtown art gallery. They've been a customer of the bank for 20 years. Their outstanding loan is $2 million. Charlie comes to the bank asking to borrow another $1 million secured against the assets of the company. The purpose of the loan is part of his divorce settlement from his wife of 30 years. The reason why they decided to divorce is that Charlie's left and moved in with his 22-year-old assistant. So here's some financial data. So the question is, what issues do you see here? What are the questions that you would ask, and how would you think about evaluating this risk? Now, so there's a huge judgment element in that, and we're not looking for moral judgment. But there are red flags in that simple little case study, and we want you to highlight how important was Mary to the running of the business, for example. And the fact that Charlie's just taken a 5-year lease on a Lamborghini, So what we're actually testing is thinking skills. And it's why, we talk about the craft of SME banking. Now, the challenge for us is that how do we use data? How do we digitalize or use data for good purpose in making those decisions much more efficiently in the future. And how do you use data for really what is an element of judgment? You know, and that is something that we're grappling with, actually.
Yeah, and the bias.
Hi, Lyndon Darling from Lingley. You said using data for the consented purposes is obviously very important, and that sort of links to the privacy laws in Australia, and Australia being very behind, quite late to the game in raising the bar with privacy laws. Do you find, is that somewhere that you're finding easy to compete in this market, or, and what are your feelings about that?
Well, very conscious of privacy issues. Again, it goes back to a comment I made earlier, that when you start a new business, you start it free from legacy. Now, you can look at the rules and laws and regulations at the time, but you've got to be in touch with the way society is evolving and make sure that the organization is set up, not only to comply, but actually to act at a higher standard, higher level, around privacy, around the integrity of data and how that data is used. So it's very much part of the way that we think about the company. But I agree with you, I mean, on privacy laws, but on a whole range of things. It was the discussion we had with the Minister earlier on this morning that, around what I sense is a kind of incremental regulatory environment that really needs to be much more transformational, and it needs to be set strategically rather than reactively, and we don't have that. And so what we've got is a hodgepodge, sometimes of conflicting regulations, but also regulations that are not really thinking about the future, they're kind of reacting to current events. It's a long-winded answer, but it is a big issue.
Anybody? Oh yeah, we're between you and lunch.
Hey, Joseph. Sorry. You alluded to some of the challenges of running a public listed growth fintech. What would be your advice to other fintechs that are exploring the IPO route over the next couple of years? And what are the traits in your mind that are important to be achieved by the fintech before they make that important transition and going into the public market?
Yeah, it's a great question. I would be very, very careful about thinking about going public. It can create all sorts of conflicts in the way that I touched on some of them about how you want to run the company. You have to be conscious of a new stakeholder in a public market. And you will be you'll start life off as a small cap stock, so you've got lots of investors that are not really informed investors. You've got the vagaries of the share price. I'm living that right now. Without stock has been down about 25% from last Thursday. Emotion driven. People kind of just react that way. My advice would be to a fintech with great growth prospects, stay private as long as you can. But too many businesses think, let's get this business up and running, and the prize is becoming public. I would caution really carefully about that, because things do change, and you're releasing information publicly every 6 months. Now, some of that stuff you might not want to release publicly for a whole range of good commercial reasons. You find yourself having to manage to consensus, right? And so the business can fundamentally change, and the culture in the business can fundamentally change by the decision to become a public company. So the question then is, when is it the right time for the company to be public, if indeed that is a right time? And that's going to be quite unique to the individual business, and how obviously you're going to have shareholders as the company grows that are going to look for some liquidity event, and that often is, let's go public. But the answer might be, no, let's look for a strategic buyer or merger partner. because that's going to serve the best interest of the company. So yeah, I would guard against rushing to be a public. I personally wish that we had not become a public company 2 years ago, but we had raised $1.2 billion of capital privately, and some of our shareholders were saying, when are we going to see some liquidity? So we kind of were convinced that being a public company was a good idea. I think there's all sorts of problems with being a public company, and short-termism is right up there on the list of things that are a problem with it.
And can I just add one more thing just before we close, just before you go, just from an ethics perspective? I would really encourage businesses to deeply think about your purpose, the purpose of your business, and what good to society you're offering, and also the values and the principles that underpin that. We talk about it quite flippantly. Oh, you don't at all. But one may talk about values quite flippantly, they're stuck up on a wall, whatever that means. But what it does is it develops an ethical framework for your organisation, provides really defined guidelines to what good looks like and what right looks like. And also it really helps you tackle with those grey times that will constantly occur as you evolve and the temptations to grow. So that's it for me. And a big thank you to Joseph, the Maverick, who's awesome.
That was amazing.